Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's another bright and beautiful day, another week out there with some new opportunities. And I'm just going to make this video short and sweet because we got a lot going on this week, starting off with the dollar. And in fact, I'm going to put up that trend line one more time. Just to reiterate, the dollar is just hanging on by a thread here. And basically on the weekly time frame, that would confirm in my book the third drive of hidden bearish divergence, prices making higher highs, RSIs making lower highs, and at a minimum I'm looking for a shot down to the 21 at 105.69. And if we wanted to, and that is the bullish case for Bitcoin as the dollar comes down, risk assets typically go up, not a guarantee, but just what we've been tracking over the past few months. On the bearish side, if you look at the 4 hour here, we do have the 4 drive philosophy in place where we have 4 higher lows and 4 lower lows in price. So short term, I do think the dollar could pop back up to the top side of the range, which would be more in line with more sideways action in price action over the next week until we get the federal funds rate hike coming in November 2nd. I do believe that could be the catalyst for another major move, and I wouldn't think it would be unheard of for Bitcoin could sit sideways for another week here and just kind of bore the death out of everybody, like we saw back in 2018 on Bitcoin. Way back here, if you guys don't remember, we had this massive descending triangle, and price action just went on and on. In 2018, we made a low here at 5,900, finally broke that low. So that was February 2018 going into November of 2018. So was some boring price action. I know it's not fun watching it move to the downside as the dollar has increased. So what happened last week or over the weekend on Friday, we were talking about this a little bit. The dollar had a bearish close, and I said more than likely stock market would be up today. We had multiple drives of bullish divergence pointing to a target up at that green 55. Getting a little bounce right now, and I'll just hone it back into the dollar. If somehow the dollar picks itself up by its bootstraps and plays a little rally to the top side of the range, I mean, we might get some more sideways for a little bit longer, but that weekly close like this is a bearish close, and I guess we would invalidate that possibly with daily closures back above one. Yeah, I'd wait for this level at 114. And that would be the bearish case for Bitcoin. What other things are coming up this week that could provide a catalyst for Bitcoin to break this monotonous range that we've been in? And I'll fall back on the CMEs here. We did gap up along with the stock market, gapped up this, when futures opened on Sunday at 3 p.m. Pacific time. And the gap is just getting filled here almost perfectly. You can see this on the 15-minute time frame. So is that another gap up on the 15-minute? Yeah, this is the gap I'm talking about. So this was the gap from Friday afternoon to Sunday afternoon at 3 p.m. Gaps like to get filled, so we gapped up. Market came down, retested the gap. And the bullish case, again, if we if we don't shoot right through the gap, right, then typically you get price action that heads onwards and upwards, and even on a 4 hour time frame. So there's a little bit different look on CME versus on spot price action. But again, this is the range. We're looking for a close outside of this range on a daily time frame. We are saying on a daily 17,780 and to the downside, and 21,500. Any kind of a break outside of that range likely gets us the next move. And why is that? Volatility will likely be expanding at that point, And this is the signal we've been following up for weeks. Average 25% move when we get expansion on volatility on the daily time frame for CMEs. And how do we define that? Above 20 percentile. Probably not going to get you the whole move, but should get the general direction and some time to, jump on the side of the market makers, the people moving this market. So if you don't want to take a trade from the middle of the range, I mean, that's what typically, people aren't doing right now. Other than that, for economic events that could cause the dollar to rally, I just had a couple of notes, and here's what I want to show here. Yep. So today, PMI data, Europe and the US, and Yellen. I wonder what Yellen's going to be saying today. So PMI already showed a contraction, shows what the Fed is doing is working. Tuesday, we got consumer confidence. Wednesday, China GDP and house sales. And then Thursday, the US GDP, which that's going to be important. I don't know about the ECB policy. And Friday, the US PCE inflation and the Bank of Japan. So all these things are pretty important. And here's what the news on Reuters said today. The dollar edges up amid suspected BOJ intervention, and the pound eyes UK politics. So funny that they mentioned that. So it said last week on Friday, the yen hit a low of 149 per dollar overnight before being swept to a high of 145 within minutes. And that move suggested the Bank of Japan, acting Japan's finance ministry, had stepped in again, and basically they're selling dollars and buying yen, right? They're holding up the Japanese bond market, and this plays into our theory. The Bank of England kind of set the precedence for all the other countries to just print money, right? So it says Japan likely spent a record 5.4 trillion yen, 5.4 to 5.5 trillion, around $36 billion. And it's yen buying intervention last Friday. So again, this is what happened when the Bank of Japan sells a bunch of dollars and buys yen, right? So, but the rally already fading, and they did this same thing back here. They had a $20 billion intervention right there, and it looked like the rally got faded. So does this have some legs on it right now from the bottom to the high? Bounced 4%, but it's getting governed to the downside right now, and the yen, you wonder how far they can just print to infinity. So as as they were selling dollars on Friday, i.e. these big candles, right, and buying yen, you can see the currency moves pretty strong here. Okay, other economic events that could pump the dollar. Well, we've got earnings coming out this week from big ones like UPS, Microsoft, Alphabet or Google, Facebook, Amazon, and Apple on Thursday. MasterCard and Visa, big earnings week this week. And if they miss on earnings, which I don't know if you saw the finance earnings that came out, everybody's earnings per share is down in this inflationary environment. So it's all about the expectation versus the reality. If the expectation is, hey, everybody's doing bad, so everybody's going to do bad this week, that's okay. If they miss their earnings, that's when things start to look bad in the stock market. But as for now, bullish divergence playing out, and on the daily time frame, we did break above this falling channel, which I would mediate it with a daily closure above here to say, hey, this moves in force. Otherwise, we could just be putting in another lower high here. Yep. So those are kind of the economic events to cover this week. And otherwise, I think, two things we're looking for: dollar breakdown or breakup, and we're looking for volatility to start to expand on the daily time frame, and on the 2-day, and on the 3-day, and on the 5-day. They're all just very, very low. And 5-day Stokes are still down. We'll cross up in another 6 days. So momentum is to the downside, but volatility is contracting. So no move yet. What's going to be the catalyst? I wondered that just, pulls the market in either direction. I think it'll be the dollar, and then the capitulation event, probably going to be surrounded by the bond market. But that's enough out of me for today, guys. I hope you have a blessed and highly favored day. Post a comment, like, subscribe, and let me know your thoughts. Take care.